So you got a bunch of debt, you are overwhelmed, you're stressed out, you got a bunch of different payments, a bunch of things, minimum payments going here, there, and everywhere, and you want to be able to learn to know if you should consolidate those debts, and if it makes sense to consolidate those debts, or if there's a better strategy out there for you to be able to get yourself out of debt once and for all. In this video, we're going to talk about debt consolidation. We're going to talk about how it works as a strategy. We're going to talk about the pros and cons. And then I'm going to give you my personal recommendation at the end of the video as to whether or not you should use debt consolidation as your main strategy to get yourself out of debt. My name is Cluff. I'm a former financial advisor turned financial educator and coach, and I absolutely love helping people manage, protect, and grow their money. Getting out of debt is a huge issue and it's a huge problem. It's a huge thing that everybody wants to do. Nobody wants to be in debt. I have not had consumer credit card debt or consumer debt for almost 15 years. I do have some debt, like I have my mortgage and I have some other things, but I really want to share with you the ways that I've helped my clients over the years get out of debt. There's a strategy to it. Debt consolidation is one strategy. It's one way to get out of debt. I don't necessarily recommend it as your first line of defense or your first strategy to try. But if you've tried a few other strategies, which I will mention up here in the challenge in the corner here, I have done videos in the past on different strategies to get yourself out of debt. So debt consolidation is basically where you take all the debts that you have and you roll them into one debt. And then from that debt, you can then pay one payment. So it makes it a little easier to consolidate it down to one payment. If you got 6 or 7 credit cards, instead of making 6 or 7 payments every month, now you're just making one payment and you're good to go. Another really good reason to consolidate debt is to get a better interest rate. A lot of times you're in debt on credit cards, which is like 20, 30, 20 some odd ridiculous % interest rate, and you can usually consolidate into a personal loan in the 10 to 15 range, which doesn't sound like a lot of savings, but it could end up being thousands of dollars of savings. And so I highly recommend that if you have tried other methods of getting out of debt and you just have that consolidation is the strategy that you're going to go with, make sure you're getting a very low interest rate on the loan that you're getting, because when you consolidate the loan, a lot of times people will mispackage it as a get out of debt strategy. When you're consolidating the loan, you're actually not getting out of debt. You're just taking all the debt and you're compiling it into one account from 6 or 7 accounts or more. And so you still have the debt, you still have to pay off the debt, and depending on the terms of the loan that you're getting, you're going to want to be careful, because I'm going to talk about that here in a minute, because you want to be careful that you're not actually putting yourself in a worse place. So just make sure that you know what you're doing when you're getting into a consolidation loan, because it's still debt, it's still a loan, and you still got to pay it off over time, but hopefully you'll have better terms than what you would traditionally have in a credit card. So let's talk about when debt consolidation makes the most sense. It makes the most sense if you're paying 20, 30+% on any credit cards and you have multiple credit cards and you're overwhelmed with where they're all going, you have minimum payments that are about to the limit of your budget, and you just can't put anything extra towards anything. And especially since you're probably paying a lot of interest on, or mostly, or if not all interest. And so with a debt consolidation loan, you can actually get a chance to put some of your payment towards principal and actually get that loan actually paid off and get it down over time. If you can qualify for a loan at a much better interest rate, that's a good time to do a debt consolidation loan. Also, if it will help you, because sometimes when you have a lot of credit cards, you want to take all those credit cards and put them into one loan and then close out the credit cards. I don't recommend you close out all the credit cards, maybe closing out a few of them, since we're going to talk about in a minute the reasons why you should be concerned, or we should, some of the cons of debt consolidation in a minute. But the pros are you want to be able to get yourself in a better place where you have one payment or minimal payments, and you can actually put some of that money towards principal, because you have a better interest rate on the loan. Now let's talk a little bit about what are some of the reasons why you should avoid doing debt consolidation, or that you should be concerned or worried about debt consolidation, I should say. One of the things is that if you have a bad habit of spending money, and if you took all of your credit cards and paid them off, and you had one loan payment that you were making to pay off all of the credit cards you had, now you have this false sense of security that, wow, I have a balance available. I have available credit now on my credit cards. I can go spend some more money. Don't you dare do that. If you're the kind of person that doesn't have the discipline, and that doesn't have the ability to, or hasn't started working on changing your habits, debt consolidation could actually be a detriment to you and your financial future, because you're going to take all those credit cards and you're going to pay them all off with one loan, and then you're going to gaslight yourself into believing that you have credit available to you now, and you have cash available to you now, and you can go buy stuff. It really, getting out of debt is not so much about paying down the loans or finding out the math. That's super important. But getting out of debt is also working on changing your habits, behaviors, and beliefs around money. If you're not taking time to realize, you know what, the reason why I'm in debt in the first place is because I have a spending problem. If you haven't looked at why you have that spending problem, maybe it's something that you learned as a child. Maybe you saw your parents model something. Maybe you saw a best friend model something. Maybe you had a trauma in your life, and the way that you deal with that trauma is spending money. There is definitely a dopamine hit when you spend money. So if you're not working on those reasons why you got into debt in the first place, a debt consolidation loan could just put you right back into that bad spot where you're back into debt even worse. Trust me, I have clients that have come to me after trying to get out of debt on their own with debt consolidation loans and other things, only to tell me that it didn't work, that this exact scenario that I just shared with you absolutely happened to them, and now they're in an even worse situation because they have a debt consolidation loan and their credit cards are racked up, and now they don't have the credit to consolidate the new loan or the new credit card debts into another loan and to get one big loan and do the consolidation again. So now we have to come up with a really fancy and creative strategy to get them out of debt. So some of the best places to get a consolidation loan are going to be your credit unions and your banks. Don't get a do not get a consolidation loan from a guy named Guido or Vinny. I just tell you right now, that's not going to be the best option for you. A home equity line of credit can be a great option for that, as long as you understand the rules. Another thing you want to look for in a consolidation loan is you want to look about what are the terms in terms of how long you're going to be paying that. So let's say you have a 20-year consolidation loan. That's not going to be a good deal because you're paying off over 20 years. And the interest that you're going to pay, even if it's less, you're going to pay a lot of interest because that's a really long loan and they're counting on you paying it for 20 years and they're going to make a ton of money on you. So you want to get a very short term if you can, or as short a term as you can, as short a term as you can afford, I should say, because the faster you can pay that loan off, the less interest you're going to pay, which is a huge part of getting out of debt, is paying as little interest as possible. So at the end of the day, debt consolidation is not a magic bullet. It's actually one of the many strategies that you should use to get yourself out of debt. And if it's the strategy that works and makes the most sense for your particular situation, then we should move forward with it. One of the things that I like to do with my clients is I like to take a look at all of the different things that are going on in their financial life and their financial picture, and I like to share with them all of the different strategies that are available, and we discuss which ones are right for them and which ones are wrong, and we kind of mix and match in many cases. Sometimes consolidation loan will work, sometimes debt negotiation works, sometimes snowball works, sometimes debt avalanche works, sometimes it's a combination of all those things mixed together in a proper strategy to give you the ability to get out of debt. And then when we get you out of debt, or we actually create a plan for you to be out of debt, we then work on the reasons why you were in debt in the first place to help you change those habits so that you create new habits that serve you and get you to where you need to go so that you can actually stay out of debt and never go back. How many of you would like to get out of debt and stay out of debt? Put in the comments below, say, I want to get out of debt and stay out of debt. If you want to learn more about different things, if you've ever said to yourself, man, I wish they taught this stuff in school, I got you. I have a school community that I've created. I think it's going to be about powerful. I'd love for you to join. I'd love for you to see they're there. Go to pariscluff.com/school and join me in my school community. Once again, debt consolidation is a tool. It's not a magic bullet. If you got anything out of this video, if you got value out of this video, hit the like and subscribe button. If you missed my last video where I talked about why you should invest in the stock market, what are stocks, then you want to check that out here. Until the next video, make sure you're taking time every day to turn your income into wealth and build a massive bank account. Have a great day.